Hey folks, I hope you're doing well. Today we're going to do the trade review this morning. I had 3 trades and 3 losers. All 3 of them ended up being losers. The first trade of the day was actually a winner, and then I tried again and then it made it a loser. So we'll go over that real quick. Now here on the right I have the chart for the option I traded on Netflix. Now, actually no, that's not the chart I traded on Netflix. The calls I traded on Netflix were the 400 calls, which are now trading at 13 cents. So let's take a look at those calls real quick. You can see here 9:35 a.m. I was bullish Netflix with some of these calls, these 400 calls. You can see they popped up. I managed to take some profit off here. So you can see here I bought 2 around 52. I sold one at 64. And then I placed my stop under my break-even point around 50, and it ended up triggering at 47. So that's not great right there. And I believe it triggered right somewhere here on one of these moves, okay? So generally I think I need to be a little tighter with those stops next time on the rest of the position, but generally that first trade was a decent scalp, and I used my stop to get rid of the last part of the position to protect those profits. All right. Now the next trade here, I did try again at 9:49 on Netflix. You can see here, right here, as it was holding, I was expecting it to hold this bottom here and try and make a move higher and make a lower high or something. And we tried to move higher, but it was kind of weak. And at this point, look at this right here. So on the right, I have the chart for the option I was trading, the 400 call. You can see the nice pop in the morning, bought, sold the rest, and tried again. Now at this point right here at 9:49-ish, you can see that Netflix made a move from 371 to approximately 372. But if you look at what the option did from in that time frame, 1 second here. If you look at what the option did, you can see it just went straight down. So that's either lack of demand or a drop in volatility. So you can see that right there. So these are the kinds of things that make trading options really tough. So we'll just look at that one more time here. You can see that I tried to go long at 9:49 a.m. for the second time there. Price was $50 a contract, and we got this little move up here about a point or about half a point or so, and you can see that from 9:49 the calls basically went nowhere, and they in fact went down at that point. And the call went down while the stock price was going up. So there you go, you have it. When volatility's flat, nothing happens. And as you can see, these calls just pretty much got destroyed all day, and I stopped out when it broke 370 for that position, okay? So it broke 370, I was out of the trade. Now, at this point, now this is where it gets interesting. So I said, okay, Netflix is moving lower. The market doesn't look that bearish. It looks like we're holding our supports and we're gonna maybe change the trend or something. So I tried to make a play off of this gap fill support, and my stop was going to be below 368 at that point. So what I did was, because I saw volatility was kind of dropping off and expecting it to continue to drop off, I sold a put spread on Netflix. Now, the mistake with this trade was that the put spread I sold had a spread that was way too wide. And I think this right here is going to be a game changer for me as to how I'm going to be trading in the future, in the sense that I probably won't be short-term trading with option spreads unless they have a tight spread, okay? And so yeah, that's pretty much the general idea here. So you can see here Netflix 370 and 367.50 put spread. I sold it for $1.07, and my fill wasn't great. I could have got a slightly better fill on that. And basically the spread itself had a 5 delta, which means that for every point the stock moves, the spread is going to increase or decrease by approximately $5. But you can see that that was really not the case, because I guess we got hit with a spike in volatility. Yeah, you can see volatility spiked considerably at that point. And also my spreads, I guess it was a combination of my fill being bad, volatility increasing, and the fact that the spread was wide to begin with. So I ended up taking a much larger than anticipated loss because of this right here. And it's because of those 3 things that I mentioned. Number 1 was that the spread was wide. Number 2 was that my limit fill wasn't that great. You kind of have to limit into the spread a little bit, and that's what makes it tricky. And number 3 is that volatility did increase there considerably, making those premiums go up, making my position even more of a loser, you see? So that's the tricky thing with spreads. So I'll just give you an example right here. If I make a spread, I'll bring up my options chain. If I make a spread here, let's see if I make this exact same spread, the 370 and the 367.50. Now it's heavily in the money. But you can see, look at Look at how wide this is, from 185 to 125. That's approximately 50 cents, with the mid being at 155. So you got to really limit in to these types of spreads. If you take a trade like this, you got to limit in. So let's see if we make it bigger. You can see that the spread actually got tighter. That's weird. So I made a 5-point wide spread here with the put options on Netflix, and you can see that the spread is slightly tighter, but it's still about 30 to 40 cents wide. It's about 40 cents wide there. That's pretty wide. I don't like that. Whereas if you take an option, any kind of option on Netflix, especially the lower delta ones, you can see here, if I'm trading an option with, say, a 5 delta, you can see the spread is approximately 5 to 7 cents wide. And now it's wider because volatility is pretty picking up in the market. But you see, I can handle a 5 to 10 cent spread, but like a 40 cent spread, oof, that's rough, man. For day trading, I don't think that's recommended. So yeah, guys, there was my mistake for the day. I did try to trade Netflix again. Yeah, right there. Like, I saw this volume coming in. I traded it 10.43. I was long, didn't take profit. I tried to take some profit, but it didn't quite work. And then I ended up stopping out the trade for a tiny loss. You can see there, $4 a contract. Not so fun. So 3 losers today for me. And yeah, I don't think I'll be day trading using spreads anymore, unless the spreads are tighter. So let's go over a few examples here. Let's see if we can find any credit spreads short term that actually have decent spreads. So this is Facebook. Let's take a look here. So if I make a spread with the, I don't know, this and this, let's see what happens. Okay, you see that? 63 to 58. That's good. That's a good spread right there. Now if I made it wider, 200 to 195, still good. It's less than 10 cents wide. So that's what you want to see right there. Now, if you go to Tesla, for example, you make a credit spread on Tesla, you can see, look at this. No, this is not recommended. You do not want to trade this. Look at this, 270 to 155. Where's the mid? How can you get filled on this? If you put a stop, where are you going to put your stop in the order in the market? Where are you going to put your stop order in the market? Look, if you get filled at 220 and you want to put your stop at 250, you can't, because the freaking bid is at 280. Like, it makes no sense. So guys, you got to really be careful when you're trading these types of spreads. Look, if you're going to day trade a credit spread, and this is me learning today, literally from my own mistakes. Guys, if you're watching this video, please leave a comment below saying, Chris, thank you. I will not trade credit spreads with a wide spread ever, because I will get ripped off and my stop order is going to get triggered for no reason. So there you go. Let's take a look at something else that's volatile, like SPACE, SPCE. Not much going on here in this options chain. If I take those options, you can see they can't even give me a quote on the spread because nobody's trading these options. See, that's great. So again, guys, you don't want to be trading options like this. Look, I'll try and make a spread, and it's like 40 cents, 30 cents wide. No, thank you. I will not trade that spread. No, thank you. Let's go back to, let's look at Apple just for fun. Apple options are very widely traded. So if you take, say, that kind of spread on Apple, you can see it's 15 cents wide. That's not so bad, actually, because you can limit in to a 15 cents wide spread and it won't be so bad. Now it's not even showing me a bid and ask though for that spread. And you can see your delta is 7. Again, going back to Netflix, you can see this kind of spread on Netflix is from 115 to 180. Way too wide. That is way too wide right there. But what I find odd is that if you move the spread a little bit, you can kind of find it's still 40 cents wide. No, that's too big. 40 cents wide is too big, guys. 10 cents wide max, or 15. For fun, let's see what happens if we go to a later dated expiry. Probably even worse. Yeah, look at that, even worse. 145 to 85. Nah, that's horrible, guys. That's horrible. For short-term trading, you cannot trade with these big spreads like that. You just can't. You're not going to make money. The only people that make money with big spreads are, who do you think? Market makers. That's it. One last example, SPY. Obviously, the most liquidly traded in the whole market is going to show us some decent spreads here. So each option are generally penny wide, or like 2 cents wide. So if I take a put spread on SPY, for example, you can see there, not so bad, from 13 cents to 24. So generally, if you want to do credit spreads and stuff like that in day trading, short-term trading, you got to trade the most liquidly traded options only. Never, ever, 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 ever sell credit spreads where the spreads are 40 cents wide or more. Take it from me. I lost money. Okay, bye. Have a nice day, guys. Cheers.